Hi everyone, Old Man Crypto here, and welcome back to the fourth unit in our series of Introduction to Crypto. Hope you've enjoyed what we've shared with you to date. Hope you enjoy this program. Today we're going to be talking about the Unit 4, which is some of the risks associated with investing in crypto. Some of the prior training slides have talked about the risks, but we'll get into a little bit more detail today. So hope you enjoy. Please click the like button and subscribe to the channel and share the link with your friends and family. Enjoy our training. Our first three units of training have been done. The first was an overview of how cryptocurrency works. Then we talked about how you can find the market value of a particular cryptocurrency. And the last one that we did was how do you buy and sell cryptocurrency. And today, Unit 4, we're going to talk some about the risks of investing in cryptocurrency because it is risky, it is not risk-free. Now we're going to look at what are the risks of investing in cryptocurrency. So let's get started. The first risk we're looking at in terms of investing in cryptocurrency is volatility. That means the price of your crypto moed or cryptocurrency can go up or down minute by minute. If you look at the tracking sites that we gave in earlier presentations, you'll see it changes minute by minute. So it's highly volatile. It's a new form of technology, and your price is going to fluctuate significantly very quickly. This means that the amount you invest can go up or down on a short period of time. The other thing is there's a lot of people that are pushing particular cryptocurrencies, crypto projects, saying they're the best in the world. They're just coming out. They're going to go up 1,000%, and they try and get you to invest in them. So be careful. There's a lot of risk there, and you pay a price today, and tomorrow it's at zero, and that has happened and can happen again. So what everyone always says, do your own research, find the projects you think that are good, that are solving real world problems, and looks like they can make a business. Then you'll probably be okay. They may not go up as quickly as you would like, but at least they don't go to zero quickly as well. All right, so volatility, that is one risk. Another risk with investing in cryptocurrency is there is a lack of regulation in many countries. Most of the countries in the world are still looking to implement legislation and regulation of cryptocurrency. Example, in the United States, there is a big lack of regulation. So what's happened is for example, the Securities and Exchange Commission is regulating by suing. The big case that's most public right now is XRP. There is no regulation. XRP thought they were doing things correctly. SEC came in, said they were a security, not a commodity, and sued them. And if you were an investor in XRP 4 or 5 years ago, you saw your value go down dramatically overnight when the suit was announced, and the price has been suppressed ever since. Hopefully that case will be settled in the first quarter of this year, or certainly this year. No one knows for sure, but it's been going on for 2 years now. So hopefully it'll be resolved, and XRP will assume what its market value really is. So be aware of that. I don't know which country you're in, but the majority of countries at this moment do not have regulation. You may invest, and once you've invested, you may find that the regulation that gets implemented is against you, or some agency tries to regulate by suing, and you see your values changed overnight dramatically because of these things. So as you're doing research on your cryptocurrency, make sure you look at what's going on in terms of regulation in your country, because that does have a big impact on the values. Another risk to your cryptocurrency value is security. Cryptocurrency on the exchanges and in the wallets for your self-custody are vulnerable to hacking. So you have to be very careful. In fact, today there was just another notice I saw where almost $100 million in crypto was stolen by a hacker that was able to get into the exchange and basically clean out one of the whale accounts. So you have to be very careful. You have to be careful how you store your private keys. You have to be careful on what emails you click and open, because the criminals now are after crypto, and they'll do everything, try everything to get you to give up your assets. So security, always be aware of security, and you know, do your strong passwords, change passwords fairly regularly, and use two-factor authentication where only you have that second factor, whether that be Google authentication or some other method, email verification, whatever. Security is extremely important, so always keep that in mind when you're storing your assets. Limited adoption is another risk. It's not a great risk, but it is a risk if you're planning to use your cryptocurrency for real world purchases. There are firms now that have charge cards or debit cards associated to your cryptocurrency wallets, to where you can use your cryptocurrency in everyday transactions. So it's improving, but it is a limited adoption around the world. But it is going to improve. I would say over the next 1 to 5 years, it's going to improve dramatically on how you can use cryptocurrency. But that's one thing to keep in mind. I would say at this time frame, you're investing in cryptocurrency to increase your wealth, to hold for a while to see the value go up, and not so much for a checking account to spend on a day-to-day basis. But limited adoption around the world at the moment is something to take into account when you're looking to buy cryptocurrency. Finally, as always, tax is a risk. So once again, the taxing authorities are all over the place in terms of crypto. Many countries haven't adopted any rules for taxation on crypto yet. So as you're investing, make sure you're looking at your country's tax regulations and how they're going to treat crypto or have treated crypto. Because at the end of the taxing period, you're going to need to file your tax documents and do whatever they require in terms of your cryptocurrency. So please be aware, tax is still very vague in many places, but it will have an impact on your values as you invest in crypto. So just do your research into the tax laws and understand how they affect you in your country. In summary, crypto is still a new technology, relatively new. I just saw this month is the 4th or 5th year anniversary of Bitcoin, of the Genesis block of Bitcoin. So it's really not that long since it's come onto the market. And with new technology, there's always risks. And the watchword for any investment is never invest more than you can afford to lose. That's just it. If you don't bet the bank on crypto, and because it is, as we've said, very volatile, and you could lose the total value of your investment, and you don't want to be left without any income or investments at all. It is always a good idea to do your own research and assess the risk before doing your investments in any investment, including cryptocurrency. And you should consult with your financial advisor or professional before making any investment decisions. Thank you for watching this Unit 4 of Introduction to Crypto. I'm Old Man Crypto. We hope you have enjoyed listening and watching this Unit 4, talking about some of the risks of investing in crypto. On this slide, you can see how to contact us. Feel free to contact us. Please like the video on YouTube. Please subscribe to the channel. And tell your friends, family, and friends about us so they too can benefit from learning more about crypto. Remember, this is not investment advice. It's for educational and entertainment purposes only. Thank you very much, and see you later.